Today, we're diving into the Toyota Motor Corporation. At the time of this recording, the stock price hovers around $145 and has retained a stable buy status over the past year. Recently, Toyota's operating income has decreased due to soaring material prices and one-time costs. This offsets the positive effects of depreciating currencies like the yen. The company has also had to cut output targets amidst the global chip crunch, with profits tumbling 25%. Toyota expects to produce 9.2 million vehicles this fiscal year, down from previous forecasts of 9.7 million, but still ahead of last year's production of about 8.6 million units. Currently, Toyota CEO Akio Toyoda cautions against the electric vehicle hype. So, how does this attitude affect Toyota's stock price, especially concerning criticism of the newly announced 5th generation Toyota Prius? Well, before we dive into the philosophy of present-day Toyota, let's take a peek into its history. Toyota was started back in 1819 when Saikichi Toyoda founded the Toyota Spinning and Weaving Company, after inventing the first mechanical loom and revolutionizing the weaving business in Japan. Given that his looms produced exceptional cloth while saving on threading, this invention enhanced yields while decreasing faults. With a problem-solving approach, optimization and efficiency are the core of this company's philosophy. As such, it's no wonder Toyota led hybrid engine technology by the end of the 90s. With the debut of the Toyota Prius in 1997, Toyota is widely recognized as an industry pioneer in the design, production, and distribution of hybrid electric vehicles. The company now sells more than 40 different hybrid car models. However, the corporation has recently come under fire for greenwashing, its skepticism of pure electric vehicles, and a concentration on developing expensive hydrogen fuel cell cars like the Toyota Mirai. It does make sense. If you compare the amount of hydrogen fuel stations relative to electric chargers, it's a no-brainer. Electric cars have taken the lead, yet don't forget that Toyota is massive, manufacturing cars under brands like Daihatsu, Hino, Lexus, and of course, Toyota. Additionally, Toyota has ownership interests in vehicle manufacturing joint ventures in China, the Czech Republic, India, and the United States. It also enjoys a 20% stake in Subaru, 5.1% in Mazda, 4.9% in Suzuki, 4.6% in Isuzu, 3.8% in Yamaha Motors, and 2.8% in Panasonic. Toyota's stock is included in the Nikkei 225 and Topix Core 30 indices, and is traded on the London, Nagoya, New York, and Tokyo stock exchanges. Therefore, this giant is not to be ignored. The Toyota brand consistently takes top spots among the most reliable car brands. Now, let's take a deeper look at the numbers. Price-to-earnings ratio is a crucial indicator for value investors. The PE ratio is a simple way to assess whether a stock is over or undervalued and is one of the most widely used valuation measures. Toyota's PE ratio, as of November 28, 2022, is 11.24. It's apparent that Toyota is a good pick for value investors. However, there are other factors to consider. Toyota has a return on assets percentage of 3.71. This is mediocre regarding returns relative to the industry average of 7.17%. The company's return on equity, 9.48%, is also average, running at 11.64%. Toyota's asset turnover ratio is around 0.49. Not good, meaning the company is not using assets efficiently to generate additional sales. Using a 10-year treasury bill and the capital asset pricing model, Toyota arrives at a loss projection of 17% long term. Given that the company's beta is 0.6, a loss of nearly 17% per year is possible if macroeconomic factors such as the economy and interest rates remain the same. Although the stock settlement ratio is rather high, investors are increasingly focused on short-term gains rather than long-term investments. Investors seeking to maximize returns may consider purchasing shares. Analysts' 12-month price target is $155.41, ranging from $145.85 to $164.96. This tops the previous price of $142.90 with a consensus forecast of a 16.44% gain. Wrapping up, Toyota Motor Corporation stock has remained stable at buy since last November. However, Please be aware that we are not giving investment advice or soliciting the purchase or sale of Toyota shares. We're simply looking at the numbers to increase public awareness. This has been the Investment Brainstorm. I'm Riley Tanner with Dukascopy TV. Thank you for joining us. And if you found this video helpful, please don't forget to like, subscribe, and share it with others. See you next time.